Welcome to the fourth chapter of the official Forex Tester Online trading course. It's giveaway time, and not only one giveaway, we are giving out 42 accounts of free Forex Tester Online accounts, so you can use Forex Tester Online completely free for everybody that enters the giveaway on this free trading course. And the conditions are really simple. Let's check them through. Basically, we need to subscribe to the channel and leave a comment under the video to enter. So basically there's 6 videos, so there's 6 entries that you can get. You could win a lifetime license basically for all your life, or basically or 1 year subscription or 1 month subscription. Each video is going to have 1 lifetime, 1 year subscription and 5 monthly subscriptions. So basically in total there's 42 giveaways that you can enter, and basically you can comment on every single video of this trading course, so it's excellent. Each video of this course will have its own giveaway, as I mentioned, and you need to comment under to basically have a chance. On top of that, if you comment with different comments, especially comments that features that you like Forex Tester Online or why you want Forex Tester Online, please comment down below. And basically if you have more than 1 comment, then you have more than 1 chance to win this giveaway. As well, really important, we need to register for a free account in Forex Tester Online. And to do this is really simple. Basically we only need to come down here where we can see our plans, and here we come to free demo, and we just need to enter with our Google account, Microsoft account, or just register with a normal email. And this is obviously is important so you can enter this giveaway. And at last but not least, really important, you need to have an email on your YouTube profile. It can be any email, it doesn't need to be your personal email or anything like that, but preferably the email that you've actually used to register for this free demo, because this email is the one that we're going to use to be able to contact you. So to resume everything, what we need to do is basically subscribe to the channel, like the video, comment the video why you want Forex Tester Online, and register for this free account that I've just showed you at the moment. And this way you'll be entering in this giveaway. Obviously you can have all this information down in the description so you don't have any doubts at all. And we are going to finish this giveaway on September the 6th. And the draw time, basically we're going to do a massive live stream here on our channel on the September the 9th, where I'm going to announce all these winners. And like I said, really important, if you don't have a public email on your YouTube channel, we can't reach out to you. So please, if you are a winner, we have 7 days, or in this case you have 7 days to put your email on your YouTube profile as a contact method, so we can reach out to you and give you your free account. So good luck to everyone, and let's continue with the video. And in this video we are basically going to learn about trading strategies, how to develop a trading strategy, how to create a trading strategy. It's everything that we're going to be covering in this video, so stay tuned because it's really interesting, and especially don't miss the next one, that we are basically going to learn how to understand how our trading strategy is performing. But let's start with the first, and obviously we need to start with the basic question: what makes a trading strategy profitable? Because a lot of people can think it says like it makes money. But yeah, it makes money today, but does it make money tomorrow? That's the question that we've got to ask when we're actually creating a trading strategy, because obviously we've got to think as well that in a back test we can have really good results, and then if we take it to a real market, the results aren't so good and can even lose money. So what I want to show you basically is, if you look at this equity chart, this is from one of my personal trading strategies that I use every single day. And as you can see, the trading strategy has losing periods, and this is totally normal and valid. But what we need to understand is that a trading strategy, for it to be profitable, it needs to be consistent. And as you can see, we do have a consistency where we have lost here, but we have recovered, we have lost again, we recovered, lost again, recovered, and it happens in a cycle. This is a healthy way of seeing and this, what you can see right at the moment, is a healthy equity chart, because we have our drawdowns and they constantly get recovered. So the only way to achieve this, obviously, is by building the trading strategy in a correct way, and then optimizing it, backtesting it, and everything else that you see in the next one. But first of all, we need to understand how to build a trading strategy so we can actually understand then how we can optimize it. But it's just a quick example so you can see what makes a trading strategy actually profitable is that it stays healthy with these cycles where we make money, lose a bit of money, make more money, lose a bit of money, and make more money. Okay, this is what the consistency that we need to look for, and this needs to repeat over and over again But no, don't worry, because I'll show you in the next video exactly how all this can be done. And let's go to the main topic of the video, and is how can we build a trading strategy? And it's really simple. At the end of the day, building a trading strategy is quite simple. Then obviously we need to make it work and make money. But to start off, to build it, to feel comfortable with it, we can do it in a simple way. First of all, we know that a trading strategy is basically a set of rules that we use to enter and leave the market, like entry rules, exit rules, and our filters. Okay, the filters is basically to let us know if it's a good idea or a bad idea to enter the market. So if we come to a chart, like in this case, it's a euro against the dollar, how can we set these filters? How can we set these entry rules and all this? It's really simple. And the way that I like to do it first is I like to separate it in two things. First of all, my entry rules need to have two concepts. I need to have the bias, that is basically if I'm going to buy or sell in the market. So I want to find, first of all, the trend. And once I've got this trend, then I will want to find the entry point. Okay, so I'm going to separate it in two sections, where basically I find the trend, and then with this trend in the hand, I'm going to enter the market. So what I like to do is basically, first of all, just have a quick look at the asset, like bring it out, see how if it moves, if it's got strong trends, if it tends to have more ranges. In this case, the euro against the dollar tends to have more or less some quite large ranges. So something easy that we could apply is maybe using a moving average. Okay, this is just an example, and there's loads of different ways to find the trend, and you can use your favorite. Let's say a 200 period moving average, and I can see that this more or less filters out a bit of this noise of this way it comes here. You can see it stays in a range. Here it stays in a range as well. But the overall is actually on a downtrend. Another thing that we can do with the moving averages is set it based on time frames. So let's say this 200 moving average right now is setting for 200 hours. But let's say I want to set it for 24 hours, for the last day of trading. Okay, so this will be the last day of trading moving average, where basically you can see that when the price is below, it's below the actual average of the previous 24 hours. So this is a cool way to sort it out. And as well, we basically would add another moving average to maybe filter a bit more this noise. And let's say I pick up and I want a weekly moving average. What I can do then is basically 24 times 5, and this is 120. So 120 moving average would be my weekly moving average, and this can give me an idea on how it's moving in the weekly bias. And by doing this, now I've got my daily, my weekly, and as well obviously my hour price. And then this way you can see out that this noise filters even more out. And now let's say I could use this as a trend. I could use the market structure that we've seen in the past video. I could use support and resistance. I can use any type of thing to actually find a trend and sort of say, okay, when this happens, it means that the price is going in this direction, and now I can look for some entry points. So what I'm going to do now is I could either use market structure again to find some entry points. I could use let's say maybe some market structure. As you can see, we've got some market structure levels sitting around here. The price hasn't come to touch, so it comes back up again, comes down here. Look how the price reacted on this zone here. It's all in a downtrend, so it's all in my favor. I could even look for the break of the lows. So you see the price came here. When it pushed up, if it breaks this low again, I'm going to enter a short on the downside. The price comes back up again. There's it there. Doesn't matter. It takes liquidity of this level here. I could take a short trade when the price breaks in and takes a liquidity. I could take a trade when the price breaks this low again and goes down. There's many different ways of finding the actually entry point. We could even use indicators like enter an RSI. The RSI normally tells you the overbought and the oversold. So I could use maybe a 5 RSI or a 3 RSI. And as you can see at this point here, when the price bumped in here at this zone here, okay, we could enter when the RSI closes back down again. There's loads of different ways that we can look for an actual entry point, and the most important is that you feel comfortable trading this way, because obviously we can't build a trading strategy without feeling comfortable when we're actually trading it. Because I can build a trading strategy, a brilliant trading strategy, the best one in the world, but maybe I can't trade it as a trader. And we're going to go through this as well in the psychology in the future video. But what we need to understand is that we can't just pick any random trading strategy. Another thing that we can do is actually, it's a bit contradictory what I've just said, but we can go to YouTube and pick any type of strategy that you see there, look at it, look if you would be able to trade it, okay, if you feel comfortable with it, if you can be consistent with it, because one of the most important things in trading is actually being consistent yourself and trading every day when you need to trade, and not like, I'm not going to trade today, no, I'm not going to trade tomorrow, I've got something else to do tomorrow. No, if you're going to be serious about trading and you have a trading system that has an entry every day, you need to be there every day. Otherwise, all the work that you've done in the backtest is all gone into the trash, because at the end of the day, the statistic that you got on your backtest is not going to be the real statistic that you get in the real markets, because you are not trading when you should trade. But said this, you can just pick a trading strategy that you find in YouTube, that we've got on our channel or anything, and say, okay, I like this trading strategy, I think I can work with it, I'm going to put it to a test. So okay, so that way you've got a base of a trading strategy, you've got a set of rules that you can play around with and then adapt it to yourself, so obviously you can use it in a correct way. So now we've got this, we know that we need to find the trend, obviously, then we need to find an entry point, and now what we need to add is filters. Filters can be any type of filter that you can think about that could say, okay, this might not be a good idea to trade. So for example, on news, okay, it's not going to be a good idea to trade on the news release. Okay, this could be an easy filter that we could add, as well as maybe I don't want to trade Mondays because on Mondays my win rate goes down. That can easily happen, and it's another filter that we should add as well. Maybe if the trend is pushing too hard, then I'm not going to enter the market, because when it pushes so hard, it tends to have bigger retracements, etc., and it hits my stop loss. Okay, you got another filter added. And obviously we don't want to add too many filters, otherwise we're not going to take any trades. But the most obvious filters are the most important ones, and these should obviously you should add. And now let's hop on to the most important part of trading, and this is how you are going to exit the market. Because obviously I can enter the market at any spot here, but what makes me money is exiting the market. And this is the most important part in trading, is when to exit the market. The good thing is that in Forex Tester Online, we've got a really powerful tool for this, and you're going to see this in the next video, where I'm going to show you how to backtest and how to read the analytics and how you should develop everything. But as I say, just now we can leave it simple so you can understand that we need some exit rules. We have the entry rules, okay, perfect. We've got the market structure, we've got the liquidity, we've got all this good stuff that we can use to enter the market, but when are we going to exit? And here's the thing, we have different ways of exiting. The first thing that we could easily do as an exit, let's say we entered a sell position here, we could exit with basically a fixed stop loss, okay? Basically a fixed stop loss and take profit. So I could place the stop loss on the high here above, basically at this level up here, and place a take profit down here at a risk reward of 1-to-1. That would be perfectly okay, and there's no problem with that. As well, what we could do is use a trailing stop. A trailing stop is basically that it's a stop loss that is sitting right at the moment here above, and when the price comes down, it's just going to follow down the price until it hits the trailing stop. By doing this, obviously you can always extend the trades, but you must be careful as well, because a lot of times it can shorten your trades, because it can wick back, take liquidity and drop back down without you being in that trade anymore. As well, we could add the trailing stop based on the moving average. As you can see, the moving average, since it entered up here, it came all down to here, and when it touched the line here, it touched the moving average here, we'll be exiting the trade. We could do that as well. There's different ways of trailing the stop loss, and we can do it how the hell we want to. At the end of the day, we need to feel comfortable at doing it. Another thing as well is to set maybe a break even. This break even, basically when we enter the price here and it drops, let's say 10 pips, we put our stop loss into break even, and this way our position is protected. And this can help you in terms of the psychology, because you feel like, okay, it's a risk-free trade. But be careful, because obviously by doing this, you are closing the odds of the actual take profit, hitting the full take profit, and maybe it could come back and hit your stop loss. And this is really common, that a lot of people don't think about when they add a break even, but it's something that happens a lot. So keep that in mind as well. But Basically, what we need to do is add our exit rule. We could add this rule, an exit rule with an RSI when it goes to the oversold, in this case because it's a selling trade, or when anything happens in the market and you can actually quantify it. You can actually say, okay, this happens now, today, tomorrow, and in 1 year. Then you can use this as an exit rule. But obviously, the most common is to use a take profit and a stop loss with fixed take profit and stop loss, or by using it by the market structure, placing your stop loss up here and your take profit and risk reward of 1-to-1 or at 1-to-2 down here. This is the most common, and at the end of the day, it's up to your choice how you want to exit the market. But remember, that's the most important decision that you're going to make. And then we've got all this together. What we have created is a trading plan. And a trading plan is basically the plan that you need to follow every single day when you enter the markets. And it's really important that you actually follow it as you've created it. Because if not, the statistic that you've got is not going to be reliable. And it sounds quite obvious, but a lot of people don't follow it as they should. Sometimes they miss a trade and they still enter the trade when they shouldn't. Or sometimes they place a stop loss maybe a bit bigger than their actual trading plan, or they take profit, they put it too short. And maybe if their trading plan says that their take profit should be 20 pips, they're closing the trade at 10 pips. This isn't bad. In terms of breaking your trading plan is bad, but closing a trade earlier isn't bad, as well as adjusting the stop loss depending on the market condition isn't bad either. But if it's not in your trading plan, it's not something that you should be doing, especially if you're starting off. If you've been trading for 10 years and you have a lot of experience, then you can think about doing this, but always including it in your trading plan. So this is the gross operandi of basically creating a trading strategy. You know, now you've got all the knowledge that you need to create your own trading strategy as well. You can see all the trading strategies that we brought to the channel, so if you want to check them out. And obviously as well in YouTube, there's thousands and thousands of different trading strategies, so you can actually pick some of them and have a test and see how you feel while you're actually backtesting it, see if it's a strategy that you can use. And based on that, we can go to the next video where I'm going to show you how to backtest, forward test, optimize, and all these cool things that we like to do in this channel. So stay tuned and don't miss that one out.